percent. It's at its 200 DMA right now. They've seen a flat revenue growth. Margins have dipped on a Y-on-Y basis as well. But FY15 on a whole has been decent. So to discuss the earnings now, we have the management with us. Nishant Arya, the Executive Director of JBM Group, now joins in on the phone line. Mr. Arya, thanks very much for speaking with us. Or can I call you Nishant? What is the reason for the dip in Q4, given that FY15 itself has been quite strong? I mean, was there some sort of seasonality that played out in Q4?
No, definitely, because this particular company has two divisions. One is the component division, one is the tooling division. The tooling division is a cyclical business, which is not, the sales are not realized on every quarter. So in this quarter, if you see, there's a gap of 15% at the EBITDA level, but at the PAT level, but the gap between the last quarter and this quarter, like the preceding, in Q3, we had about 17 crores of tooling sales, whereas this quarter we had 3 crores of tooling sales, which is less than 20%, whereas the profitability has not gone down by that, because the efficiency and the profitability of the component business has gone up. So therefore, the company has sustained that. And in the last quarter and the first quarter of FY15, the company had quite good tooling sales. So that being a seasonal business has impacted this particular quarter. But as you rightly said, the company has about 52% increase at the PAT level for FY15 vis-a-vis FY14.
All right. Hi, yeah, go ahead.
That's the reason the company has declared a good dividend compared to the previous year. And we really see that the kind of growth which the company would be seeing in the coming years would be in line with the industry, other more than that.
All right, Nishant, your point is taken that in fact that seasonality factor as well played out. But going ahead, your tool division is a small part of your business, but what is the run rate we could see in terms of revenues? This time around it's coming only around 5 crores, but going ahead from the next quarter, could we see it return back to around that 17-20 crores that you've been reporting in the past few quarters?
So definitely, being a seasonal business, but at the annual level, you would see that the tooling division does not contribute significantly in revenue, but is a very profitable business. So we see a good growth in the tooling business also at the annual level. That's why we do not calculate really the tooling business at a quarterly level. But at an annual level, we see at least 15% growth or 20% growth in the tooling business.
In the tooling business, so that will be on a year-on-year basis. So if I just look at it in this year, you've done around 100 crores, so you're seeing 20% growth over there on the tooling business?
Yeah, 15 to 20%, so yeah, about 115 crores.
So 115 crores is what you could target for FY16?
FY16, yeah.
All right, then let's focus on your margins as well. In fact, we are seeing some kind of pressure. If we just look at it, for this quarter, the margins are down a good 150 basis points. Going ahead, can we see the margins return back to around the 12.5-13% that you are
that is directly linked with the tooling business, because if I would have normally removed the tooling business, then margins would have gone multifold of the margins have already gone down. But the component business has enhanced efficiency, therefore the margins have only gone by 150 basis points.
Nishant, I want to just persist with this tooling division point just a little bit longer, because even, you say Q4 is a seasonally weak quarter, right? So even if I compare on a year-on-year basis with the Q4 and FY14, you were seeing an EBIT of nearly 7 crores in your tooling division, which is this time come down to just about 40 lakhs. So, if it is a factor of just simply seasonality, what has gone so wrong on a Y-on-Y basis?
No, on a Y-on-Y basis, if you see the toolings which were done last time were more high-end toolings and more intricate toolings which were supplied. Whereas in this quarter, the toolings which were manufactured and supplied to the customers were not so specialized in high-end toolings. That's also a difference which was there.
So is that a change in business strategy?
No. Because slowly we are moving more and more towards the high-end toolings, high-tensile toolings, which we are manufacturing for different customers, where we are having higher margin. So that's the strategy. And now in the upcoming quarter, in Q1 of FY16, we'll also see the bus vertical coming in play. So therefore, the new division will also be added in this particular quarter.
Okay, so in your bus vertical, what is the kind of investment that you have been made, and how much is that going to contribute to your top line?
See, at the group level, we have invested about 500 crores in the bus vertical. And this particular vertical, we have a capacity of about 2,000 buses per year. And in our case, we are manufacturing low-floor premium buses, so which are created a new segment in the country. So therefore, these kind of buses would definitely add significantly to the top line. So we are seeing that in the coming financial year, at least, if not more, about 15 to 20% as a minimum would be coming from the bus vertical.
Wow, so your FY16 revenue target then would be last year around you have delivered around 1,550. So given to, just take into account that you'll have your bus division as well that will be coming into play, and also you said that your tooling division will do 115 crores. What's the rough revenue that we're targeting for FY16?
About 2,100 crores.
Wow,
or more.
All right, so that will be a good 25% plus jump on the top line. So that sounds quite good. But another quick question, Nishant, with regard to, we spoke a lot about your operational performance. I was looking at consolidated numbers for these for this last quarter. Your other income, in fact, has come in low. It's only come in at around 1 crore. That compares with around 4.5 crores on a year-on-year basis. Your finance costs as well have come down. So could you tell us what is the cash that you have on your books? What's the total debt in your books? And also, if I look at it, your tax expense for this final quarter was very meager if you just compare it. You paid only around 1 crore on a PBT of around 22 crores. So you could just give us those numbers, your total cash in your hand, what's your debt, as well as why for the last quarter the tax payable was lower. Was it an adjustment?
No, actually what happens is that whenever we are putting up plants of a certain size in different states, as per different state policies, we get benefits on tax expenses.
Okay.
So that came into play in the last quarter, which was Q3 of FY15. Therefore, the tax expense was lower. Whereas in this particular quarter, the tax expense was not having any effect of that. And on the cash and the debt, I think those are pretty okay as of now, because the debt hasn't risen much if you compare the gearing. And the leveraging ability of the company is quite substantial in the given scenario. Even after the investments of the bus project have gone in, and we try to see that how the company is lean and is financially stable at the same point.
All right. Quick last question. What's the targeted tax payout for this year? If I look at it in percentage terms, given that you have a few tax benefits that are coming into play, what should be the tax rate?
See, that is something which really depends on a quarter-to-quarter basis. I won't be able to determine that immediately.
All right, Nishant. Point taken. All the best for the coming year. This quarter was a quite bleak one, but the year in totality was looking quite good. And the guidance that you've given as well, 2,100 crores on the top line, that will be more than a 25% growth on the top line, looking quite interesting.